So I'm Kirk Robinson, and I'm a partner at BFIN. We are a financial advisor and commercial advisor for social housing, affordable housing and disability housing. I'm here today to talk a little bit about a recent transaction that we helped to get funding for in the disability space. It was for SDA housing, so it was very specific in that regard. It really was. Thank you.
So you can take that.
Wonderful.
Take that away.
Thank you. There we go. And I'll talk you through some of the challenges that we had when we were looking at that from a commercial point of view and from a financial point of view. And keen to take any questions and talk a little bit about what may be relevant for folks in the ACT as well.
I click for you, sorry.
Okay. Thank you. So the transaction that we were involved in was one that the New South Wales Government had put out a tender for back in late 2016 called the Hunter Residences. And what it involved, I'll come, actually, can you go to the next slide and I'll come back to this one. It involved the New South Wales Government transferring about 330 clients out of 3 existing large residential centres in the Hunter Newcastle region. And they're at Stockton, Tomaree and Canberra. And moving people out of those residences into group homes. The government ran a tender, if you can go back, the government ran a tender and a joint venture of Compass Housing, which is a CHP based in Newcastle, together with Blue Chip, which is a CHP based in Campbelltown, put together a joint venture and tendered for that project and were ultimately selected by FACS, the Department of Family and Community Services, as the winner of that tender, and in fact construction on the first of the group houses commences later this month. What we're doing is we're building, we've acquired land and we have designed 70 group homes, 5-bedroom homes, and maybe if you can flick to the next page again. You can see there's a spread of houses through New South Wales. There's a couple in Ballina in the north, there's a couple out in Dubbo, there's a couple in Wagga, 3 in Shell Harbour, and a few spread throughout, obviously, the Hunter Newcastle region and a couple in Sydney. So quite a big transaction. It involved financing of about $155 million. We had a lot of negotiations with the New South Wales Government in terms of acquiring land from them. They had almost 70 sites. A couple of sites are sufficiently large that we're placing a couple of homes on those sites. So we acquire land and then we had to do the design ourselves, and we obviously had to, we are funding construction, had to go through DA processes and all of the other service connections and things like that. And ultimately, Home for Life is the joint venture, and Home for Life will be it's a charity, it's a registered community housing provider, and it will be the entity that will own these houses really, for the next 50, 80, 100 years, we hope. And they're houses with places available specifically for SDA folks. They're built to SDA requirements of high physical needs, so they're adaptable and capable of taking anybody who actually has SDA attached to their plans because they are at the highest specs. If you can go to the next slide. There are a lot of challenges in getting this transaction done, and I'll step through a few of them here. Some of them are quite specific to a tender situation, which is what this was. Some of them are more specific to actually how do you bring investors into funding disability housing. And part of my role when we came into this transaction was actually to unblock a situation where Home for Life had only part of the money. And back in March of this year, I was having coffee with a friend of mine and I said, I'm aware of a transaction that's failing at the moment because we only got half the money. And we got to talking about it, and he said, well, actually, that's the transaction I'd be very interested in doing. I'm looking for funding opportunities in the disability housing space. Do you think you can get me in? And I know the guys at Compass Housing very well. I know the guys at Blue Chip very well. So I had a chat to them and said, oh, how are you going with your funding? You know, we got half and we think we're very close on the other half. I said, well, you've been telling me that for a number of months now. I think I've got somebody who would be very interested in funding the whole lot. And as we went through it, it turned out that they actually could see a way to do a deal, but we had to act quickly because we were in a tender situation. We had 2 months really to get together a fully banked proposal and take that to the government and find a way through. Some of the transactions specific to this transaction, so some of the issues and concerns and challenges specific to this transaction, the department didn't own all the sites at the time that we were looking to tender the deal. So we had to do a lot of due diligence on these sites, not exactly knowing what we would uncover, because the department themselves, who were selling us the sites, they didn't know. So that cost a lot of money. Not all of the sites had the development approvals or the CDCs, the complying development consents, and that made a difference because that meant that we had to do that work as well, which again, it costs money. We are required to build SDA compliant dwellings. Unfortunately, at the start of your construction, with all the best intentions, you get an architect to design for you a fabulous looking house, but you don't get a certification up front. You have to wait until the end. So the people putting the money in are never quite sure until actually they've spent their money whether or not that dwelling is going to be compliant with SDA eligibility. That created its own concerns, and we had to allow for a little contingency to make sure that just in case the certifier came along and said, you know what, this door here doesn't work, or the bath's in the wrong place, or you haven't got sufficient space in your bathroom for a turning circle, or whatever, we had to make sure we had contingent money for that. You can see more contingency, more cost, more uncertainty, and from a financier's point of view, it's all risk, and they say, eventually they have to say, well, is that too much risk for me to take on? In the situation in New South Wales, FACTS were requiring us to actually build 70 houses, which is enough space for 350 people. But they were only going to transfer about 330 people to us, and that may end up being less than that by the time we actually get through construction. That meant that we had to find an investor who would actually be willing to take on some vacancy risk. They're not having a guaranteed return. And all of that also gets built into your analysis when you're looking at, do these returns stack up for the risks that I'm taking on? This was an important one. FACTS required a long-term commitment from all of the parties involved, from Home for Life being the owners and from the financiers, and weren't going to just buy the land from FACTS, sit on it and flip it. It's a very valid concern from a government. It's a very valid concern, as a carer. If you've got somebody who you need to have accommodation for, you can't have that worry as well that you found them a new accommodation, but maybe in a few years the person who owns that house is going to flip it. So we've got a long-term commitment to the New South Wales Government, which they can sue us if we fail to deliver, that we will hang on to those houses, regardless of what the vacancies look like. So there are a lot of conditions placed on this particular transaction, which will be different for other opportunities out there. During the course of the transaction, we were dealing exclusively with FACTS. We didn't have that much contact with the NDIA, but maybe if you can flip to the next page. That was a concern to us because in April this year, there was a paper that the NDIA published which suddenly raised a whole bunch of questions about which models, which living spaces were going to be continued to be supported under the SDA funding packages. Fortunately, we were able to work with our financier and with FACTS to make sure that we understood who we were actually being obliged to take on as our clients. and make sure that we understood that our house designs actually complied with what NDIA were angling for. So we had to redesign some of these houses where we did have 1 bedrooms, and we had to actually make them into 3s and 2s. And we still were able to keep some 4s and 1s, but we had to subtly change some of our designs, which again costs money. So every time the government changes their mind, and you know this, every time the government changes their mind, unfortunately, it costs you money. This is a big one. We, at this stage, the clients that we're taking on, not all of them, in fact, the vast majority of them do not have their plans sorted out. And this is a big concern across the sector in general. We were assured that they would have plans in the next 18 months, which will fit nicely in with when these houses come on board. But we still need to take on the responsibility of working with FACS, who are their current providers, and still providers, to actually make sure that these people do get their plans organised well in advance of when these homes will be ready to take the people in. In the future, we've all seen the federal government hasn't guaranteed the sources of funding for the NDIA, and therefore by extension hasn't guaranteed into the future the funding for the SDA. So we do face risk in the future that there could be revisions to the SDA funding package, which will have implications for the financiers, because the financiers are genuinely looking to make a market return from renting these houses out. They have allowed for changes in SDA pricing, but subtle changes, not wide-scale changes. So that's a risk that the financiers do take on and do have to monitor. And one of the ways of monitoring is actually going and talking and advocating to NDIA, hey, look, if you want to encourage the sector, you actually do need to be seen to support the sector as well. One of the important things, and I suppose a number of you have found this, in order to get a financial investor interested in taking on, providing money for disability housing, you have to package the investment opportunity in such a way that they understand the risks and they're familiar with the risks. If it's a whole bunch of new risks they've never seen before, they're likely to turn tail and run. So a lot of our job was actually to say, right, these are the risks we see in the deals, and we spent hours over round tables just going through and whiteboarding and that sort of style of things to get the risks from different angles. We had operational people, we had legal folks, we had the finance folks such as myself, we had the construction folks, we had the architects, really just to try to talk about, what are the risks in this deal, have we seen those before, and how could we deal with them? And at the end of the day, we were able to put together a commercial structure that worked for the 2 charities involved in Home for Life, being Compass Housing and Blue Chip, and it worked for the financier, being Lighthouse Infrastructure. And I said up front, the reason that I came into this deal was it was stuck. It was blocked for financial reasons. Home for Life only had a part of the money. And it was important then to actually get back to, what are we trying to do here? What are the commercial aspects? What are the risks? And what are the opportunities? And there are opportunities here for investors, which is where I see opportunity, to actually make a go of this. But you have to really do a lot of work, and it costs money to actually quantify what those risks are and have a think about, well, if it doesn't turn out the way that I hope it turns out, and it in fact turned out another way, do I still make a decent return out of this investment? All of those challenges made it very difficult to bring in a traditional bank-style funding arrangement, which is why Lighthouse was instrumental in getting this deal done. Next slide. I've pretty much stepped through the factors for success. We had a knowledgeable construction company in Blue Chip. We had a knowledgeable and experienced tenancy and property management company in the form of Compass Housing. They've got some houses already in New South Wales through the ADIC transfer of 103 group homes, and they've got a dedicated disability team. So they really understood what the issues were. And when that NDIA paper came out in April, they were able to say, well, look, yes, that's a position that people could take in the market, but actually what we're really seeing is the following. So they helped to basically calm the investors down. We have flexible designs in the group homes, so we have the ability, just with the architects and clever engineering, we've got the ability to, even though they're 5-bedroom homes, separate areas of the house. So we can have a 1-bedroom with living space and kitchenette up front or at the back, or a 2-bedroom, and basically manage those houses for the future, such that if we have certain tenants with certain needs, well, we can accommodate that in these house designs. We did a lot of due diligence and it really cost a lot of money. So it is something, to be careful in the planning stages to understand what you're getting yourselves in for. And we spent a lot of time making sure that each of the parties would understand what they were signing up to if they were going to proceed with a tender process and then with negotiations with FACTS. I can't stress this enough. FACTS, being a government department, finally, this year, after the transaction almost falling apart last year, FACTS engaged with some advisors, some good advisors on the financial side and on the legal side, and it made a world of difference for us when we were negotiating with them, because we had the ability to finance people talk a certain language, legal people talk a certain language, government people talk a certain language. And we had the ability to translate because we had people on both sides who would say, oh, actually, what they're trying to explain to you is the following. And that made a big difference in this transaction. And the flexibility and the long-term funding that we were able to get from Lighthouse Infrastructure made a big difference in making sure this transaction happened. Next slide. This is a really simplified structure diagram of how the investment works. Any questions? So it was a transaction done with FACTS. So FACTS had certain conditions that were placed upon us. They were going to sell us the land and we were required to design and build the homes and operate them for the long term. We have a couple of community housing providers who are the members of Home for Life. And I said up front, this is a joint venture, so we have Blue Chip and Compass Housing. They also play a role in the delivery of these houses. So there is a separate contract with Blue Chip for construction, design and construction, and there's a separate contract with Compass Housing for tenancy management. So these contracts are full-on commercial contracts. If they have performance standards, if they fail to perform here, we can boot them. Yeah, so it's not that they are members and by default they end up with the rights to do the construction or the rights to do the tenancy management. There are real contracts there with real performance requirements and abatements and penalties and consequences if things aren't done according to the contract. Before they sign them, obviously they have to spend a lot of time internally themselves, getting themselves comfortable and their boards comfortable to take on the risks in the transaction and allow enough contingency. And all of that still worked from a financial point of view. We tested that extensively. Funding partner, as I've mentioned before, Lighthouse Infrastructure, who really did make a world of difference in getting this done. They put up in the order of $150 million for this transaction, and that $150 million will be spent, will be invested over the next 2.5 years to acquire the land and to deliver the homes. And then obviously you've got the supported independent living providers who Home for Life itself won't have the direct relationship with, but obviously the clients have a direct relationship with, and the tenancy manager needs to have a direct relationship with as well. So there's contracts out to them as well. And I think, yeah, sorry, that's good, yeah. Application for the ACT, if you can go to the next slide. So I understand in the ACT, Summer Foundation and SGS did a report recently on the housing needs for disabled clients in the ACT, and not surprisingly, there's a shortfall. And I understand the ACT Government has recently announced certain funding support, up to $125,000 per dwelling. I don't quite yet know how that works. Hopefully it will be explained. Hopefully that will be explained in the coming months. But regardless, it should work, hopefully, hand in hand with the SDA funding or other funding under the NDIA. In the transaction that I've described in the Hunter residences, the important thing there was the investor got really comfortable about how the rental returns would work because existing clients were going to be transferred into those homes. So what does that say? They knew what the demand was. And that's a big thing for an investor is if you were to own an apartment and rent it out, you look for location and you look for a desirable location where plenty of tenants will want to come and rent from you. It's no different, or it should be no different in disability housing. You need to locate the properties in an area that's desirable and where you will have people who want to come and rent it, where it's near to local amenities, whether that's transportation links, whether that's restaurants, supermarkets, locations of employment or things of that nature. The trouble from an investor point of view is we don't know where that is. And the people who provide disability services at the moment, the SIL providers, the community housing providers, hopefully, and this is part of my job in the last few weeks, is getting out and talking to people to say, look, there are people who want to fund disability housing. They just don't have the information. They need to know where the demand is. If you can tell them and prove to them where the demand is, the numbers actually work. I can prove the numbers work because we just put $150 million to work. So the biggest step really in trying to attract investors, from my point of view, into the sector is working out where the demand is. I know people have this data, but it's not centrally collated. The NDIA, in theory, should have received a whole bunch of data from the various state and territory governments when responsibilities for accommodation were handed over. Theory is one thing. I haven't spoken with them, but I've been led to believe they don't actually have good data on exactly where people are located who need these houses. Notwithstanding that, these houses can and will be built. Summer Foundation is working with Lighthouse now on several opportunities. So it's a situation where Summer Foundation has said, I know where there are 20 people who need accommodation. Would you be willing to finance or fund the construction of some dwellings for those 20? And the answer, of course, was yes. Have you got more? So, and really it's just investors are trying to proactively work out where the demand is and how to get, in touch with the people who need the housing. I've focused a lot on SDA, and the reason for that, investors like to see, investors like to see a certain contracted, they want to see certainty in the revenue. They like to see contracted revenue. There's no reason why it couldn't work for a mixture of SDA with other rent sources, but again, introducing other sources of rent introduces more risk from a financial point of view, and so from an investor's point of view, when they assess the transaction, they really do have to balance up, is the introduction of additional risk, is that worth the return that's being projected? So at the moment, what we're seeing, the first transaction is fully SDA funding, but there is no reason in the future why that can't be a mix of SDA with other types of private market rental in the same location. That's probably about it. A little bit about us. We're a commercial and financial advisor. We've done a lot of work, if you go to the next slide, we've done a lot of work in the last few years advising community housing providers in the social and affordable housing space, and obviously more recently in the disability housing space. We're working in New South Wales, Victoria. We've done some work in New Zealand as well. So we're pretty well versed with understanding variances and differences in regulations and laws, and we get familiar with the requirements of local markets. We typically focus on investment opportunities of a reasonable size. $10 million and upwards would be a typical sort of thing for us. And there's a reason for that. We charge a fee for service. So typically when we go into this deal, and the Hunter Residences is a good example, we work at risk during the transaction. And it's only when the transaction closes that we take a fee. And so, to be honest, we actually have to assess each opportunity and say, is this size of this opportunity large enough to warrant having the legal advisors? And in the case of the Hunter Residences, there was well north of $2 million spent on legals, and that's for 70 homes. There's another $500,000 just spent on tax advice, There's another $250,000 spent on technical advice. There's another $500,000, actually a bit more than that, spent on architectural designs. So there's a lot of money that goes into something of that size, but it doesn't scale down for single dwellings or sort of 4 or 5 here or there. Yes, of course, you can do the single dwellings as a private residence, and there's plenty of examples of that. But in order to attract institutional money into the sector, they really do need to see a large transaction size or the ability to have a pipeline. They're happy to do 10 here, one in 1 6-month period, and then another 6-month period, another 10 or 15, and then build on that. So really, that's all my presentation. Any questions? Happy to take questions.
Okay, questions? One here, and one, 2, 3. Yep, anyone from this side of the room? Come on, they've got 3 to 1.
Hello.
No? Okay. So starting down here. Oh, sorry. Sorry. You already got the phone.
Okay.
Go for it.
Thank you. I wanted to congratulate you on calling for a central register, not just for the investors, but for parents and clients, because I guess we've moved away historically from institutions and centralised communities to a point where the burden for a while was put onto the parents to look after the child. And now everybody's kind of found their little niche solution, buying another property or, all the models we'll be hearing about this afternoon. And now we kind of have to bring these all back together, and more funding is again available through the NDIS to help these people. But it's very bewildering, and a forum like this, I think, is fantastic to showcase how many options we have, but I'm trying to remember them all, and I'm already overwhelmed. And I think it would be a really great outcome from a meeting like this to have a platform somewhere where all this information is being pulled together, and it doesn't have to be, 100% accurate. Nobody's going to, just addresses so you can get in touch. In the olden days, there used to be 3 institutions. You're trying to find a spot somewhere. Not a great solution, but it was easier. Now it is overwhelming, and people like Uta, and I sympathize with you, are spending their whole lives looking after a child, and as we grow older, this is way out of our range of abilities, and we need help with that care. And it needs to be easier to find, because not everybody, especially in that situation, is able to jump up and down for long enough until help arrives.
Thank you, and thank you, Kirk. You've just 2 things. You mentioned a couple of times there that when you acquired the land and purchased the land, firstly, was that at market value?
Yes, it was.
And so that they are arm's length transactions with the government?
Yes.
And what sort of rate of return is your client working on?
The rates of returns are, I have to answer it carefully because that sort of stuff is confidential. They're not outrageous returns. They're not developer-style returns. The client is interested in long-term cash flows, so they're not looking to acquire the house and sell it. Their money is actually in there for more than 20 years.
So you're working on a 25, 30-year horizon?
Correct,
okay.
Yeah. And there'd be the types, Lighthouse Infrastructure has been a traditional, more of an infrastructure type investor. They operate on low risk, low return basis. So they're certainly not looking for 15% and above returns. They're looking for much more modest returns out of the investment.
So we're talking 5 plus or?
At that level, that would be NIFIC funding. So NIFIC would be giving you money, but only half the money because they'll lend up to 55%. At about a 20, they haven't done a 20-year deal. They said their sweet spot's 10 years. It'd be about 3.5% for NIFIC money, but they'll only lend you half. Yeah, so it's certainly not that low because you can't beat the federal government. But
thank you. I've
yeah.
got the parameters. Thank you.
Then 2 here, 1 and 2. Oh, sorry. Yep.
Thank you very much. That was very interesting. Thank you. During your speech, you talked about that you were brought on to assist to sort of pave the way in a way, and also you mentioned that you had personal connections. And I do know personal connections are very important. However, a lot of people here may not, like the lady was saying before, may not have those personal connections. Would there be any chance of your group maybe putting together a group of like-minded investors into one room so that people could actually come up and put up their ideas and just sort of say, you know, this is what I'm looking at. Is there anybody in the room that would like to do this? I mean, they do it for all other things, you know, for new companies or something like that. But in this would just be a specialty group that are interested in investing in disability housing in Australia, and let people put up their ideas and sort of say, okay, who would like to help me out here? This is what I've got. Who'd like to help me out? And you might have some legal people who'd put their hand up and go, well, you know, I can help you out with this, this and this, or you might have an investor help you out. Or then you might even find that two of the programs kind of look at each other and go, hey, we're kind of the same and we're building 3 kilometres apart. Why don't we join together? So have you just thought, just a bubble thought?
I think, look, you're right. We need to bring people together to talk about how to deliver the accommodation in an efficient manner, really. The hardest bit that we found when we've subsequently spoken with other community housing providers is just to really get a handle on where is the demand. That's been the hardest thing. There are a number of service providers out there who do have these details, and we're trying to get out and talk with them.
Sorry, I'm not so much talking about community housing providers. I'm talking about your connection that you had with financial investors.
Yep.
That's the connection that I'm looking for. So you put it out there and you say, okay, well, how many? Sorry.
I mean, you look at how many people we've got in the room right now. Everybody's here because they're interested in housing. Okay, there's been a few people that have said, oh, I've tried this, or I've looked at this, or I've got lost on this way, or whatever. So already you have a room full of people that could be interested in presenting to your investors. And so that's really what I'm looking at, is the investors. They're the people that we need to get to. Yeah.
Look, be very happy fielding those types of questions. I'm not geared up with my organisation to run such a day, but I'd be very happy to work with, you know, Disability ACT or some of the community housing providers to actually have a day like that. Because I think, yeah, you're right, it would be very useful for us to know who's in the community who would actually want to put up a house, their house, if they want to sell it into a property portfolio, or they know of people who are in need who would jump at the opportunity to move into a house if one were constructed in a particular area. Yeah, I would agree with you, and very happy to work with Alison and others to make that happen.
Another one?
Thank you. I'm actually from the Hunter Valley and had family who worked in the old Stockton homes. I'm a younger brother who was trained under the awful title of a retardation nurse and worked there. Now, those homes were built in the Victorian early era or the end of the last century, and it's good to hear they're closed. I mean, they're about 40 to 50 years past their use-by date. So I'd like to sound a real note of concern, in spite of the efficiency and cost-effectiveness that you've outlined, and as an economist, of course, I admire that. but there's also something called sunk cost. And what you're doing is perhaps building, as I understand, all these homes quite the same, if they're all 5-bedroom, not 2 or 3 or 4. And in 40, 50 years' time, even 20 years' time, people will be saying, we're stuck with another Stockton. We've got these decentralised institutions. Now, I respect the views of those who might wish to choose that model now, but in a way you're tying the future generations into it. And perhaps your response will be, oh no, it's a private investment. If people change their preferences, then they'll have to sell them or knock them down or whatever. But I fear that governments, from a public policy point of view, will see those 70 dwellings costing $500,000 each or 800 grand each and say, no, we've got to continue to support them for 1 million each. Oh, that's a lot. We have to continue to support them. That's the model. And to the extent that it appears to be successful, and you've touted it as a success, which I'm, of course, a bit sceptical of, I fear it'll be reproduced all over the country. Yeah. So there's not a lot of variety and choice here. And over time, evolutionary economics would tell us we want...
No, I think that's a good point. In the situation of the Hunter residences, it was a requirement of the Department of Family and Community Services that these be 5-bedroom group homes. And so that was what we were dealing with. I understand that the funding partner for that transaction, being Lighthouse Infrastructure, is actually working on another transaction at the moment with Summer Foundation where there is a different variety of style of accommodation. And you're right, nobody wants to have an institution just decentralised again. We hope that the way we've designed the tenancy management and property management contracts with Compass Housing, where we do have specific performance requirements on client satisfaction, will actually go some way towards helping there. Public policy wise, I don't drive the public policy. What I can do is respond to it. And so in the future, should there be market-driven changes to desired accommodation styles, then of course the market will respond, and these houses may change over time, or they may be, in 20 or 30 years' time, they may be sold for something else. I can't comment on that at this point. In the Hunter residences situation, it was a specific circumstance, and we were obliged to deliver according to what facts wanted. In other areas, we will deliver differently, I hope.
Could I just add that I would imagine most of those residents were extremely old, were sort of 40 plus years of old?
No, there was a mix. From memory, in the order of about 10% of folks were over 65. I think the average age was around 37, 38. So, yeah, but if your average age is 37, you've still got a few down, in the 20s, 30s stage.
All it says to me is that it's been a bad system in the Hunter for a long time, It's just,
Yeah.
Hi, I'm Tony from the NDIA.
Hi.
Just 2 quick comments. One, and I covered it because I spoke first this morning, I covered it earlier where the investor brief that was released in April didn't actually say we won't fund one-person residences. We qualified that an existing policy which said that we can't fund everybody to live alone, and Summer Housing can attest to the fact that we've actually just funded 10 people to live in their own apartments. So just wanted to qualify that line because I was like, oh no, that's not true, let's take that out. The second thing is, and it's a bit of a comment on the Hunter residences, is the principle as far as the NDI is concerned, because as Kirk said, we weren't particularly involved in that transaction. That was a transaction between New South Wales Government and the other stakeholders. Our principle is still that the participant has choice and control. That funding for SDA will go into their plan, and at whichever point they choose that they wish to pursue another accommodation option, they will. And I understand supply is the problem there, but I also know already there's some people who are currently living in Hunter residences that are talking to developers about other options. So over time, the market, our well-informed, and we're working on making people well-informed consumers who are participants of the scheme, will start to realise, and it takes a bit of time because change is hard for everybody, that they can actually look at whichever opportunity they choose. So I just wanted to balance out the picture of this transfer.
Choice, you subsidise the other options for subsidising these options.
Thank you very much.